So Affirm reported their earnings yesterday. They lifted full year gross merchandise volume. However, they still missed Wall Street estimates. And so, where do we want to begin? Let's start with the monthly chart. And we can see how uh, in December of 2022 through May of last year, you had this basing taking place at support down at the $10 level. And one can call this an accumulation area. And from there, it was off to the races. Now, as soon as you got a close above this 13 simple monthly moving average, price retested the moving average 3 out of the next 4 months before zooming past what was support, which became resistance at $26. And it didn't stop there. In December, you had another extended range green candle. Now, it did have some levels of interest. The first one was at $40, which price just zoomed past. And the next one was at roughly $46, which was support, as you can see. And we had a candle close above that level as well. Now, if we zoom down to the weekly chart, one can say you just have consolidation within a $12 range. Now, before we continue with the analysis, let's look at the actual results from the earnings call. So, again, Affirm rose its gross merchandise volume forecast for the full year. Again, the outlook failed to meet Wall Street estimates. For the third quarter, Affirm anticipates revenue in the range of 530 to 550 million, surpassing estimates of 492 million. GMV for the quarter is forecasted to be between 5.8 and 6 billion, in line with consensus. Now, compare that to the second quarter. Affirm reported a loss per share of 54 cents, better than expected loss per share of 73%. Revenue for the quarter reached 551 million, marking a significant 48% year-over-year increase and beating estimates of 519 million. Here's what the CEO had to say. This year, around this time last year, they reiterated their commitment to building operating leverage without sacrificing credit performance, volume growth, and innovation. The market wasn't exactly convinced then, but 12 months later, we have done exactly what we said we would. Now, what's interesting is about we're going into a recession. So the question is, what comes first? Consumers becoming cash strapped, or liquidity continuing to flood into the markets by the Feds. Again, this is a buy now, pay later business model, so that will be interesting to see. Nevertheless, you have this big sideways basing range. Again, scrolling down to the daily chart, this level did hold, which is daily buyers. How was that zone created? Well, you had a rally in price, basing candle rally, basing candles, and a rally out. And then when price came back down, hit it once, reacted. When it came back, penetrated the zone deeper to find those unfilled buy orders. We did get a sell-off, roughly $4. But if you believe in the buy now, pay later model, you believe in Affirm, the sell-off could be potential opportunity to go long. Conservatively, what I would like to see is now a candle close above the most recent highs, which is roughly at $52.60, and a pullback before then going long. Thanks for watching. Subscribe. Please like the video.